The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good afternoon from TFNN. Welcome to the March 17th. Fantastic Friday edition of today's Trader's Edge Show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Let's make sure we have an extraordinary one. And of course, the easiest way to do that is to always remember that life happens for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us. Today, you and I, we get to go check out the circumstance of these markets. We get to go figure out what the bulls and the bears, what the buyers and the sellers are communicating to you and I just past 1 o'clock in the afternoon. I want you to know that I'm absolutely grateful for your presence here, and more importantly, I'm here to serve you. So feel free to pick up that phone, dial on in 877-927-6648. Of course, internationally, 727-445-1044. You can send me an email, steve@tfn.com. And inside the Tiger's Den, any ping will do. So happy St. Patty's Day to each and every one of you out there. Let's go ahead and get this show started on Fabulous Friday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. Right now, we have basically a flat market. And when I say flat, I mean flat. The S&P 500 is trading at 2381.45. It closed at 2381.40 for the most part. So it is flat. The Dow is up 3 points. The NDX is up 5. The NASDAQ Composite up 5. Russell is up 3 points. Semis are up a point. New York Stock Exchange up 2. Wilshire 2000 up 11 points. Gold is flat. It's up $1. Silver's flat. It's up 4 pennies. Light sweet crude is flat. It's up 1 penny out here. Did I say flat? I mean flat a Rooney. Now, not flat out here. If we take a look at the stocks that are moving the market, individual stock-wise, dollar-wise, to the upside, you've got a Vexus Inc. up 15% or $11. You've got MuleSoft Inc. up 46%. Maybe that's a IPO. Net, maybe not. NetEase up $8. Penumbra, that's up $6.60. Intuitive Surgical up $6. Cintas Corp up about $6. AutoZone is up $5.80. Adobe is up $5.50. To the downside, it is Regeneron Pharmaceuticals off $12, 3.25%. Amgen down 6% or $11. Veritiv Corp, Veritiv, VRTV is a ticker symbol down $12. That's 12%. That's $7. Medicines Company, $6.50. BlackRock down $6. So we have a lot of stuff to look at inside the IBB, but I want to look at what you want to look at. So please give me a call, send me an email, whatever it is, mental telepathy, all of the above will work. So the question is, hey, what are the markets doing? Hey, how about the answer? Not much. Right? There's no question that with regard to today, they are not doing much out here. So if we go take a look at if we try to go take a look, do a little checkup, a little healthometer checkup out here. Now let's go take a look at the advanced decline oscillator reading, see where we're at inside the New York Stock Exchange, getting its head above zero. Remember, if I got that chart out here, yeah, I've got it right here. Remember back in the day, you may remember it, right? Back in the day when this thing was New York Stock Exchange being the thing, by the way, for those of you that are watching us on Tiger TV, back on March the 9th, as it was pushed, it was really on March the 8th, March the 7th and the 8th. It was really March the 7th. We said, okay, we're going to soon see a bounce inside the New York Stock Exchange. 2 days later, when it got down to that minus a 267 level, as we took a look back, we said, hey, it's not a matter of if, it's a matter of when. That was the when. And what we talked about Was it oversold? Good. Now, just go back to the mindset that you might have had when, for those of you that are listening, you know who you are, whoever you are out there. You know when I was suggesting to you, I can't say anything, but sharing with you the belief that the New York Stock Exchange was oversold. The rest of the market had hardly done anything right to the downside. And a little bit, not necessarily the story with Russell 2000. So we are now reaching a very oversold condition. And we're going to see a bounce. And what's going to happen is the advanced decline oscillator is going to get us back up to the zero level. Just think about what you were thinking at that stage here, because many of you, I know because I got those cards and letters, whether by email or just simply by mental telepathy, said you are full of it and you know what the it is out there. That's right, a lot of good information. I was full of a lot of great information because look at what has happened. The probability, as soon as we got back above Stevie's yellow line, that minus 150 area, it's not really mine, but it's the area that we pay attention to. There were just so few instances, so few instances when the advanced decline oscillator reading didn't get back to the zero line. So we're back here as we speak right now. I don't know where this thing is going to close. If it does close above it, and it were to stay above it again on Monday, 2 trading days, then you know what that says? That says, okay, geez, you could actually go ahead and take a ride all the way up to the plus 150 side out there. I just want you to go ahead and put yourself back in the mindset. See if what you were saying was there's just no way the markets were going to move lower. Now, what do you do when you're back at the zero level? And that is an excellent question. You've got 2 choices. You've got 3 choices. You can go ahead and take the long position. I don't think that's the correct answer or response, Johnny. You can be neutral. Yeah, I can see that. Or you can be short. But whichever of the 3 it is you are going to choose, just make sure that you have stops in place. So you're absolutely right. I was full of it, but it was full of good information. And so then the next time that we see this same pattern unfold, you will be full of great information as well. And you'll know how to go ahead and play it, at least how to plan for it, at least what to do with your trades if you are in them. So that's now that's on the New York Stock Exchange. So we're really right up again. If we take a look and go back here to the to this page here, where we take a look at the NASDAQ composite, we're also really right at the zero level, with it being up towards its highs out here. It's a positive 10 reading. The Dow is just above the zero level. And let's face it, that volatility index, I don't have a clue. And I'll tell you when I don't have a clue. I don't have a clue how we're going to go ahead and use this little guy or gal out here to assist us these days. Well, the one way that we most certainly can use it is, look, it is relatively simple. I mean, this truly is working. Here, if we go back and take a look at the date since November the 9th, when the volatility index ushered itself down below that 50-day exponential moving average, we've had a couple of sessions, 1, 2, 3, 4, 5, 6 sessions out of all those days where it snuck its head up above that line. But for the most part, it's been down below. And markets do 2 things when you're staying down below that 50-day. You basically move sideways to higher out here. Hey, today, it's a sideways day. I think the market is out there drinking some good old Guinness Stout right now. It just has an interest in staying at the bar. And that's basically an unchanged market. Steve Rhodes from TFNN with Red News. Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. So Beth writes in. She says, Steve, I just recently read Tony Robbins' book, Unshakable. Have you read it, and what do you think? And then she goes on to say that her take was that Tony Robbins said that you cannot time the market out there. So, Beth, actually, I did scan through the book. I have not read it book to cover. I've read so many of his books and articles and things of that out there that many of the pieces of information in there are just duplicates of his first book, Money, and just other elements. But that does not mean that it's good. And you're absolutely right with regard to what he says, which is you. But I don't think the you that he was speaking to was you, Beth, or me, or many of the folks inside the Tigers Den out there. I agree that, yeah, he can't identify market tops and bottoms. And I believe that there's a whole sundry of folks out there that will tell you the same. I just think that they're absolutely right. They cannot speak on behalf of me or you. Here's one thing that I know about TR out here, and that is that he is a pattern recognition expert. As good as any of them, his pattern recognition expertise is in the study of human emotion. So is mine. My study, your study, what we're doing right here, this is the live experiment of human emotion with regard to buyers and sellers. You and I, those of us that look at charts all day, look at different techniques, we are looking at a human emotion set of pieces of information in front of us. And just like in his case, where he can take anyone, just as I could take anyone that is focusing on, how about the worst of all, focusing on suicide, and literally in hours, minutes, half a day, full day, I could get him totally out of that and get that person focused in thinking on something else. It's just really a set of tools out there, and he's become a master of it. I'd like to believe that what Tom O'Brien has created, I don't have to like to believe. I know this. I can say this with certainty, that you are surrounded by a group of people that is able to identify these different tops. Just to give you an example, Beth, I hadn't planned on doing this, but, actually, since it's kind of a flat day, it's actually pretty good to do this because, and it's easier to call our time the market, I would say, longer term than it is shorter term. Just a little bit easier. You can use the same type of tools and techniques out here. But here, I'll just put the S&P up. Let me put this monthly chart for the S&P 500 out here because it's actually very applicable to where we are at today. Now, if we go back and we take a look at two of the most significant recent highs. Now, you normally don't I normally don't show these bar charts out here, right? Normally I'm showing you candlestick charts because it's just much easier to be able to pick up something and identify a bullish or bearish reversal signal. But for today's purposes, and actually I always have this chart out here. I've shown it from time to time for different reasons, but now I'm going to go ahead and incorporate that all into your question out here. And something that Anthony Robbins and these others really don't know or probably would like to know, but you can tell them. Let's just get back to this. You're going to see, I probably should have changed these bars to a different color than black. That might have been easier out here. Let me see if I can do this. Though the reality is I can do anything. So let me just change the bar from black to, I don't know if I want to make it red. How about if hello, somebody knocking on the door. It's St. Patrick's Day. Let's change them to green. Let's change these bars to green out here. That makes all this, well, we'll see if it makes all the sense in the world. Hopefully you'll be able to see it clearly at home as we do this. Okay, so we're going to do that. The reason I want to do that is because some of the, it just helps slightly. Not enough. Probably the easier thing to do would be to put this thing back to, let me do this here. We may just have to go, instead of the open, high, low, close, we'll just go to candlesticks. Let's see how this works. I think this will probably be a little bit easier. I want you to be able to see it. There we go. Okay. So I think this is easier for you to see. What I want you to notice, if we come back into the October of come on, work with us here. We're live TV. Into September of 2000, we're in the S&P 500 right now. What I want you to notice is prices moving up, and it's doing it with less relative energy out there. It was doing it back here before as well. I'm going to have you focus on the top. When markets make tops and bottoms, one of the typical characteristics is they will do that last final stretch and do it with less relative energy. At the top, that was what was going on inside of the S&P 500. The key, though, to just moving higher, doing less relative energy, isn't the mere fact that you're doing that. It is the confirmation coming from the cavalry, coming from buyers and sellers, coming from the emotion of the market. And the emotion of the market is where you want to really understand these bullish or bearish candlesticks out here. Bullish and bearish candlesticks are really cool along the path. Okay, it's like going on a trail and seeing a cool-looking flower or animal or something like that. When you see the grizzly bear out here, what you want to pay attention to is the grizzly bear. Sometimes it's not so cool. Well, the grizzly bear, in this case here, occurs when you get that bearish reversal signal at the end of a pattern, an important pattern, price moving higher to with less relative energy out there. You'll see Stevie's red line is out here too, and that's an important tool, but I've added a new one. I've got a little bit more work that I want to do on it before I decide how to release it or talk about it. I discussed it just briefly in this morning's newsletter out here. But when you get this little crossover on top of that signal, and then you've got the Rhodes momentum signals out here. These are these green and red boxes, and they're very important. They are very, very important with regard to how you utilize those. Take a look, coming back into 2003 all the way up. You only saw one of these green signals out here. When it's red, it's just producing red signals out here. It is telling us just how super strong the market is. When you get a green signal out here, right, when you get a nice St. Patty's Day signal, the first signal is not the so-called sell signal. It's the retracement signal out here. And as soon as you see price close back above the high of that candle, momentum is ready to go. The train is back on track. It's ready to move out here. Take a look at the move down from 2000. Did you ever see another red signal? You have that nice little crossover here, not a moving average, neither of them being a moving average out here. And then what happens? The market moves lower, starts to do that I'm going to move lower, less relative energy. You start to see these red signals pick up. You get to see this crossover out here. Hey, here's a price relative strength divergent pattern back in October of 2006, September, October of 2006. Meant diddly. Why? No cavalry. No cavalry shows up. It just means it's just like a weather forecaster saying it might rain today. And you can basically say that almost every day in Florida. Hey, take a look at the 2007 top. Just a repeat and a rerun. Fast forward to where we're at today. No such signal exists. There was some weather forecast, but never a bearish reversal signal on the monthly chart of the S&P 500. It's going to 2,500, folks, eventually. We'll be right back.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Technomental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Cancel that. Didn't mean to do that. Someone sent an email and I almost deleted it accidentally. And that's from Sean. So I'll look at his email in a moment. But I want to just get back to Beth. So Beth, and really thanks for writing in and for reading the book Unshakable. It's a good book, absolutely. You know, that book was co-authored, and I would say primarily written by this guy right here. This guy you may not be, Peter Mallouk. And if you have this book, this is a book that he wrote, The 5 Mistakes Every Investor Makes and How to Avoid Them. Now Peter, recognized by barons and this, and look, I think this is a good guy. I think everybody's a good guy or good gal out there. But the purpose in writing this book here, so his deal is to be different than the other scoundrels that are out there, the big broker dealers that get you involved with their funds, and then you get funded to death, so to speak. So the one thing that I'll say that Tony and Peter certainly brought out was just kind of the racket that was going on out there. So, they stepped off the edge to put out some fairly popular books and let you know a little bit about what really goes on behind the scenes. And Beth, I don't know your age, but certainly for my kids or any kids, each of our kids out there, the best and most important thing we could do is to invest our time here and be able to share this with them so that they make better financial decisions in investing in the stock market and so forth, and ways to be able to do that. Because the reality is most people don't have the knowledge that you have. They don't take a look at stock screens and understand some of these patterns that are out there. And if you don't know about pattern recognition when it comes to the stock market, you don't know about pattern recognition when it comes to human emotion, you really can't help yourself, you can't help anyone. And those people can't identify market tops or be able to take someone that is feeling blue or has a bad relationship going on or whatever it is and not be able to repair it and move forward. So now if you take a look at this book, it's been a while since I read it, but here his very first. Now, the reason that he wrote this book, just so you understand, well, one, it was to make you aware of things that are going on, but the idea was to say, hey, don't pay your 1% and all the fees that you've got to all of these large broker dealers out there, whoever, Morgan's, the whole 9 yards, the whole crew out there. Instead, he's saying you don't have to charge those fees. I'll basically put you in a mixed portfolio. I'll teach you how to do that, and amongst other things, and I'll only charge you 1%. Year after year after year after year after year. So it's to get you, it's to convince you can't time the market, so don't even go down that path. Don't buy newsletters, this, that, and the other thing, and don't go to those other guys. It's a way to siphon them towards you here, and he's the guy that pretty much wrote that Unshakable book out there. So here, mistake number one has to do all with market timing, and the headings of the paragraphs or pages or what have you, the idiots, the liars, why is it so hard to beat the market, the masses get it wrong over and over again, the media gets it wrong over and over again, economists get it wrong, anyways, get it wrong over, you see, but the reality is Peter and others out there, they don't have access to the same set of tools that you and I do when we take a look at this, and we can take a look at these patterns that occur over and over and over again. Look, we had a big scare out here right back in the September 2015, October 2015, September 2015 timeframe out here. See, it formed that little green Stevie Rhodes momentum indicator, still with a U, still in an uptrend. And as soon as price closed above it, which it did the following month, that told us, okay, the S&P 500 gave you your next buy signal in the marketplace. Price came back and tested the bottom. You could see when it formed this little nice morning star pattern out here, it just was a confirmation that you had that bottom in place. And at this stage, price is moving higher. We've got Stevie Rhodes momentum signals out here, back into the red zone out here, price moving higher, doing it with all kinds of energy out there. So there's no major top that is in place. And if I was able to pull up my data from 1896 forward in the Dow, you'd see that these same patterns have repeated over and over and over again out here. And for those of us that are wave aficionados, what we know about the S&P 500 is what? We know that we're only in the third wave, at least another wave, which can't take place for a couple of months, right? Because you're in wave number 3 right now. So the S&P 500 is going to go hit that 2,500 target. Can I guarantee it? I can't. But what I can guarantee you is there is not a signal anywhere around that suggests that we are at the beginning of a bear market. Now, retracement, different versus a bear market out there. And can you time the markets? And it is much easier long term out here, which is really great for the buy and holders, because the buy and holders are going to buy and hold and sit through retracements out there, which is cool. It's just what happens on that next leg down. Is there another next leg down? Do you start forming no more of Stevie's red signals and only green ones? Do you take out swing points and so on and so forth out here? So this is from Sean, says, can't call in. I'm in agreement that short is probably the better choice near term. I get your newsletter. I'm also thinking that the March 1st time, September, May, the SPY may get tested. What are your thoughts on that? So let's go take a look at that question out here with regard to the SPY specifically. Can it get tested? And then, of course, absolutely it can. But let's go take a look at it just by looking only at the SPY out here. And by tested, what Sean's really trying to refer to out here is, I would assume, is by testing, all that it has to do is test at least the bottom of that March 1st. What do I want to do here? I want to turn this to compact. The March 1st low. And so the low out there is 238.37. Now, volume out there, Sean, was 149 million shares. So the first test of that came on March 15th. And it did it with 96 million shares. That was a test and a rejection. The very next day was another test, an even lighter volume, 78 million shares. So, Sean, if we're just going to take a look at swing point analysis, which many of you will do tomorrow, thank goodness, because Tom is hosting an amazing workshop where he'll be able to share with you a set of extraordinary tools so that you'll be able to interpret what the market is doing on different time frames out here. And one of those things that he'll be sharing with you is how to take a look at squawking, walking, and talking when you get to the swing points. So at this stage, Sean, if you and I are going to look at the daily chart of the SPY, we would say, swing point-wise, the test is already done. Does it have to get back up there? No. Can it? Of course, it can do anything that it wants. Now, the reason why it could, another reason why it could is because it hasn't broken down. So it hasn't broken up, but it most certainly hasn't broken down. And if you can't break them to the downside, well, you try to make them to the upside. Well, here's the swing point. Maybe this is what Sean is looking at, to the downside recently, which was March 9th, 90 million shares. The high is 237.24. The low today, 237.13. That swing point has now been tested. It has been rejected. And with only 41 million shares as we speak right now, that's a light volume test. It's a rejection. You can't bust them down. You bust them up. So, Sean, yeah, I can see where it can go tested. That's assuming that today does not close inside or lower than 237.24. Several hours left in the trading session. Steve Rhodes with TFNN. We'll be right back.
Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now, you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. Dow's up 18. S&P is up 2 points. Bob writes in, asks if I would take a look at gold and poses the question, what's going on between the yen and gold? And Bob, I see exactly what it is you're looking at. Gold's up $2, and the yen is getting longer and stronger. Let's go take a look at it right now. Here's a Japanese yen. We're looking at the currency pair. It's basically melting down, so to speak. Now, as this currency pair, as we look at it on this screen, moves lower, it's actually getting stronger out there. And it's already back inside its most recent swing point from the trading session of February 28th, the top of which is 112.89. And a nice move down here and hardly movement inside of gold. So let's go take a look at the short-term chart out here. Let's go find a short-term chart, a 10-minute chart out here. So here's the 10-minute chart. And we can see that now remember, when we take a look at the movement in gold, upper portion of the panel of the screen, versus the yen futures. Now I'm looking at the yen futures here. This way we are live, no data delay, and then also directionally speaking, it's easier to see that as they get stronger, futures contract gets stronger, so too should gold. Now it's not a tick for tick or pip for tick, however it is you want to take a look at it. It's more of a directional play. But nonetheless, we can clearly see that yen futures have had a real nice gradual shift to the upside out here where gold hasn't. Many of the bars are similar, painted similar. If you watch my cursor, you can see back here at about 8 o'clock this morning, movement lower in gold, movement lower in the yen. Next bar, movement higher. Remember, the body of the candle is the essence of price. Let's not get too caught up into the upper and lower wick or shadows out here. Those are just the extreme emotions. If you just look at the body of the candle, then you'll start to see some similarities. The bar at 820, the same. The bar at 830, the same. The bar at 840, the same. The bar at 850. You kind of get the gist out here. You can see now, here's a bar that was off. It must have been last call at 9:10 this morning. Back on track, the very next bar. So you can see that this is, for the most part. Now, it's possible that the correlation is is going away. Eventually, this correlation is going to go away. I don't know when. I don't know if it has. I don't necessarily think it has just yet. But let's assume that it has gone away. Then we have to go back and say, so what does it mean, right? Then the question would be, okay, as you put, so what's up with gold? So if we go back and we take a look at the chart for gold, where do I want to do that at? Let me see here. I don't want to do it there. I'm just trying to find a way here. We can do it right here. We'll do it with this chart right here. So let's take this. No, I don't want to do that because I'm going to mess that chart up. So I don't want to do that. Let me switch over to a different page. Give me uno momento, por favor. So let's go to a different page. And then I don't have to mess up a chart here. I can do it. We can do it right here. So here is the GDX, but let's not look at the GDX. Let's go take a look at the current gold contract for you. So that's a wrong thing. If I grab the instrument panel, then we can actually switch instruments out there. If I grab the indicator panel, we're not going to go anywhere anytime soon. Okay, so here comes the gold contract out here. And trading, I think the 12.29, is that where we're trading at? 12.29.20. Okay, so we've got the data feed is good. Everything looks good. You know, it may not be moving as fast as you want, but it's in bullish motion. Just take a look at the price oscillator down here, down below zero. But it's above zero out here. It's the next move to the upside has formed. And gold should go ahead and make run for its highs. I'd contend that more likely than not, we have an A to B equals CD that is going on. That A to B equals CD is going to take it to 1278, 1304, 1337. Something like that. And Danny writes in, and the miners, the gold miners are red today. The GDX has more problems than the metal itself. If we take a look at it as an example, here is the GDX. And so, you know, remember, trading gold is slightly different than trading the miners. And if we take a look at the miners, the GDX itself, now we go look at individual stocks and we'll find something different. So you can rattle off any individual stocks you'd like inside the den. We'll punch them up and see what their meaning is. But as we take a look at this stock chart out here for the GDX, see its price oscillator is below zero. It has turned up. It's above Stevie's red line, but that's your real support level, 22.33. What the GDX, though, has done today, it has come back and tested the top of its daily box, its TAS daily profile out there. So it's really come back to a level of support and has held. The ultimate support level on this is 22.33 out here. But below zero, it's not really as strong as... You didn't need me to tell you, but it just simply, technically speaking, it's not anywhere near as strong as gold itself. GDXJ, Danny wants to take a look at. So if we look at the juniors out here, you'll see basically the exact same pattern. Now, in the case of the juniors out here, if it is really trading at 36.29, sometimes there's a delay. So let me just come over here and check for you. So we got GDXJ, because there's no delay on this system out here. 36.28 is the number where it's trading at. And on this system, 36, perfect. Life is good. And so all that it has done today, GDXJ came back, tested the TAS daily profile high, rejected it. That says, okay, bullish, you've tested support, and this has come back and tested Stevie's red line, and it has bounced off of that. When the GDX really starts moving, should it start moving to the upside, is when you want to see that price oscillator down below, not read minus 0.492. You want to see it above the zero line. When it's above the zero line and it's rising, meeting just very simple. It just simply is bullish. Nothing more bullish than a rising price oscillator above zero. You don't have it there. You know, some of the other stocks out there, I mean, I imagine that Barrick Gold and Newmont and Gold Corp, because they're in the top 5, GC, Peter writes in, so let's go check out GC. I imagine they're similar looking to the GDX. Oh, that didn't work. Oh, GG, right? Gold Corp. No, GG. Isn't it GG? Versus GC? Which one is it? I just want to make sure I got the right thing out here. It is GG. Yeah, there's double G's out there. Yeah. Okay. I think that's what you want to write, Peter? Peter from Park City writing in. And he was just messing with me, I know, when he wrote in GC out here. But if you take a look at Gold Corp, see the same thing out here, right? price oscillator just slightly below zero. Today, a test of the oscillator unchanged line. So price oscillator still turned up. That's a good thing. You don't want to see it close at its lows out here. That wouldn't be a good thing out here for you. I'm sure we'll find the same thing with Barrick Gold, ABX. We'll put in Newmont. We'll probably see, see, Barrick Gold, that's a different story. Which actually, I think that's the number one weighting. Number one or two, Newmont is the other. And this is good. This is positive when you have the number one weighting inside of the GDX. Barrick Gold came back, tested its oscillator on change line today. Its price oscillator is above zero. So the lead dog out here is looking good. Let's see what Newmont is doing. Newmont, that's Newmont's got some problems. But not Barrick Gold. ABX. Steve Rhodes with TFNN. We'll be right back, folks.
If you're looking to unearth a new financial resource and diversify your financial portfolio, consider the new Market-Safe Core Commodity CD from Everbank. This 5-year U.S. dollar-denominated CD gives you exposure to 4 equally weighted commodities: gold, copper, WTI oil, and sugar, in one powerful CD. With no pricing caps, you can potentially earn an unlimited upside payment at maturity if the commodities increase in value across semi-annual pricing dates. And should the opposite occur, your principal is 100% protected. Keep in mind, returns are based on CD performance. There's no annual percentage yield or periodic rate of interest on this index CD. Don't miss out. With certain commodities on the rebound, now is the time to take advantage. The March 23rd funding deadline will be here before you know it. So call 1-855-750-4051 or visit everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. Once more, that's 1-855-750-4051 or visit everbank.com/TFNN. This advertisement is sponsored content. Everbank is a member FDIC.
TFNN has just launched a special event in Tampa with Tom O'Brien taking place March 18th, sponsored by Nadex. Tom O'Brien will be presenting 2 workshops for a combined 2.5 hours of education, bisecting and dissecting his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System. March 18th kicks off with a continental breakfast as we get everyone checked in, and that is followed by 2 75-minute workshops with Tom O'Brien. The first workshop from 8:45 until 10 a.m. will cover quality volume, cause and effect, and ABC structures, and the second workshop from 10:15 until 11:30 a.m. will cover swing points, testing, and the Tiger Gartley. Tom will then wrap things up with a question and answer session, which will be followed by a Tiger Luncheon Social on the rooftop of the Westin Hotel. The best part is that it's all free, but you must register to attend. Visit the front page of TFNN.com for all the details and to sign up today, and we hope to see you in Tampa on March 18th.
TFNN has put together the finest live programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 9 hours a day starting at 8 a.m. as John Logan kicks us off each trading day with the Global Market Pulse. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Mondays and Fridays, catch live trading on the Nadex platform with host Tom and Tommy O'Brien, along with Daryl Martin on the Bull Bear Binary Option Hour. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN, educating investors. Join David White as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
Welcome back, folks. Dow's up 20, S&P is up 1.5, NASDAQ up 6 points. So we've talked a lot about gold during that last segment and took a look at some of the individual stocks and how they are performing. We can see, and not all are equal. Barrick Gold looks muy bueno. That probably didn't sound that great, but here's what is probably going on. You know, can I say it with certainty? I'll say it with enough certainty, this is what I believe is going on out here. And that is, most of us, not all of us, but most of us take a look at gold. We only price it in dollars, and we don't, yet it's a worldwide currency. Probably more of a fear currency outside of the U.S. than it is inside the U.S., wouldn't you say, with regard to what's going on inside the Eurozone and so forth? And okay, let's say you don't say that. Here's what I know about the stock charts with regard to gold if we price it in different currencies. Top panel happens to be gold priced in U.S. dollars. Bottom panel is gold priced in euros. Well, right now, if you want to buy an ounce of gold, it's going to cost you 1,143 euros. $1,229, but 1,143 euros out here for a beautiful Krugerrand. What I want you to pay attention to on the chart out here, gold really got moving. Let me get my cursor. Really got moving to the upside again right back here on February the 2nd. That set up its next leg inside of gold that ran into ground. This is February in 2017. That ran it right into the high out here, which was really the top of the trend line in U.S. dollars out here, right? Gold price in dollars, upper panel. And then it pulled back. Now, the problem is that the more important line, and when it did move, it was because of all the traders looking at gold price in euros. I think gold price in euros leads the way. It's as simple as that. And right now, you know how important a trend is. It's your friend. When it breaks down, it ain't your friend anymore. It becomes your potential enemy. Of course, we want this to be our friend, those of us that believe that gold is moving topside. And if it is going to move topside, we need to see gold priced in euros get back above that trend line. It needs to we want it on that wall. We want to get it up there. And if it does, then we'll watch gold priced in euros, see if it can take out its previous highs, and then gold takes out a long-term trend line in dollars out there, and that will be very, 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 did I say very? Very important out here. So this is really the chart. Go out, get yourself a data feed, take a look at gold. Make sure you don't just look at it in dollars. It's a pretty easy formula to figure out what it is in euros out there. And just go ahead and pay attention to that. I think you will find it to be very helpful, not from an intraday standpoint, but really trying to map and understand what's going on. Because many of us are looking at the yen saying, oh, we're looking at the yen, right, with regard to gold. And geez, how come gold's not moving? It needs this trading desk and this set of eyes, those over that are looking at gold price in euros, to really get the giddy up and going out there. So, folks, that is our St. Patrick's Day special out here. For all of you that are listening in, if you're in the area, the so-called area of Clearwater or anywhere in the driving vicinity, please come on down, join Tom and the gang out there. Tomorrow is going to be a great education, a lot of fun for sure. For those of you that are going out tonight, Uber sounds like a good move out there. Just make sure you bring your breathalyzer test to test out your Uber driver to make sure he or she aren't having a little sauce out there, a little secret sauce. But be careful, and we'll be back to see what the markets are doing on Monday. Stay tuned. Your favorite polar bear in mind, David White's up next. After that, you've got Tom O'Brien. So have a great weekend, and we'll see you come Monday. Marvelous Marvy Monday. Take care, folks.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You're watching Tiger TV.